Good morning, everybody. This is Anna from hotoptionbabe.com and optionsblackboard.com. Right here I have a chart up of the SPYDER, or the ETF for the S&P 500. And what I wanted to go over with you was a little bit of some of the action that I saw that led me to go short on Thursday. And in here on Thursday, or after hours actually, at the end of the day, even on Thursday, on Wednesday, what happened was we had this huge bear flag. Now, it didn't play out that day, but as you can see here on Thursday morning, we started getting these big down moves, bear flag, big down move. Okay, we hit some support right here. Now, if you go back over here on Wednesday, see these two really long lines. Now, we call those false prints, and in those, you might find that they're a signal to the market on some of the traders of where they're going to take it. And that sounds sort of calculated, but that's how the market works. It's calculated, to be honest with you. So I always watch those. I always keep an eye on them. They sometimes play out. For the most part, they do, but it's within a certain amount of time period, within 2 or 3 days. So you can see this is on Wednesday around 1 o'clock. There's a couple of them down to 119.30 area. I'm just going to, for the sake of argument. So here we go, Wednesday, Thursday. Here we go into Thursday, and bango. Right here, you see right here, right where I've got that pencil, we hit the 119.30 and bounced off of it. Isn't that amazing? So, okay, then we bounced off, a little oversold bounce here. Okay, we go a little bit of sideways, and I said, let's go short for tomorrow in the chat room. So we all went short right where that red line is, if you can believe that, what timing that was. And from there, you can see the action from Thursday afternoon, Friday, and into the end of the day on Friday. Now, there was a gentleman in the chat room, the Options Blackboard chat room, had started his account with $1,000 just to test with me, and 2 weeks later, he is at $3,500. So, and that's pretty impressive. That's a huge percentage gain, and he's just giddy over it now. So if you haven't tried options and you really want to learn, or if you just don't know what to do and you need some guidance, I am really good at picking them out and helping you and being there for you every step of the way. So anyway, now what I want to show out to you again here is, if I can quit making marks on my chart here, but is the 3. There's 3 again false prints right here, 1, 2, 3, to about the 120.85 area. Now that I have to pay attention to, because that could mean that's where we're going back up to in the next 2 or 3 days. I don't know for sure. But I got to keep an eye on it. The only thing I say is everything depends on Europe, the pigs, Portugal, Italy, Greece, and Spain. That oil slick that happened, that terrible disaster, which just makes me sick to think of the wildlife that'll be hurt. That will be a huge implication on our economy if this plays out to be the disaster. It's spewing over 200,000 gallons a day. So, I'm keeping an eye on that too. And then we also have Goldman Sachs. And Goldman Sachs, I just want to say, reminds me so much of Enron. I just watched the whole story of Enron on a remake on NBC, and it was amazing that Goldman and Enron, a lot of similarities, and I'm not saying that's going to happen to Goldman, but Goldman I've got a $100 price target on it longer term. It won't go straight down, but I was short since last week, and I'm going to do a video on Goldman Sachs and show you the trade I made with options. So what I did was I played off the volatility, the theta, and the direction, and that's one of my favorite trades, is a credit spread, because you have different ways to make money. You can just sort of sit and let it work for you. So anyway, you guys have a great weekend, and I will be back with a Goldman Sachs trade for you, and I love you all. Take care.